think another thing that's really exciting about this model is that, if you bridge assets to Katana and you're just keeping them in your wallet, you're not earning those benefits of the yield sharing. You have to deploy it in DeFi, which encourages users to deploy those assets in DeFi so they can earn yield on those assets, a higher yield that they would get on other chains.
Hey, Jim, Justin, how are you today?
Hey, GM. Doing great. Happy to be here. Lots going on the Katana side. So we're staying really busy, but really looking forward to this talk.
Yes, I think busy is the right thing to do right now in Q4. And Justin, I want to know a little bit of a background because it's the first time I'm meeting you, and I want to know who were you before crypto and what first pulled you into this rabbit hole?
That's a really good question. Who was I before crypto? I was a traditional finance guy. I was doing traditional banking, so my history goes all the way to being a bank teller in high school. And then in college, I was also doing some bank teller work. And then when I graduated, I became a credit analyst at a bank, moved to a financial analyst, and then became a commercial banking lender, lending money to operating companies, nonprofit organizations, and insurance companies in like the Dallas-Fort Worth area. And then, I think around 2017 is when I started to, while I was working at the bank in 2017 is when I started to get into Bitcoin. And that's when I purchased my first little bit of Bitcoin was around 2017. And that's when I did my first on-chain transaction, sending it from Coinbase to an actual Bitcoin wallet and self-custodying the asset. And it was all really amazing to me, coming from a finance background and seeing how this decentralized network could allow for payments from person to person anywhere in the world. Like that really just blew my mind. And, the bear market happened around 2018, but I still kind of stayed around and did a lot of research on, what was it that made Bitcoin so special in that 2017 run up and bull market? And like, what's this narrative people are buying into? And then DeFi came along in like 2020, 2021, DeFi summer. And that's what really caught my attention when I kind of looked at these projects and protocols like Aave, which was called ETHLend at the time, and Synthetics, which was called Haven at the time. A lot of rebranding in the DeFi space that's happened over the years. And
in the crypto space as a whole.
It's true. It's just kind of the way things work. And I really just saw these as like financial primitives that didn't, just operated autonomously through code. And you didn't really need any employees. And that was really, really fascinating to me. And so I started getting involved in investing in these DeFi projects, buying the governance tokens. And I was looking for a way, I was having to manually rebalance my positions to maintain my portfolio allocations. And I thought, I really wish there was like an index product that could just rebalance this for me automatically. And then I found one. It was called the DeFi Pulse Index, which was created by the Index Coop, which was a DAO on Ethereum that created on-chain crypto native index products. And then I started contributing to that DAO. So got to the point where I was full-time at the bank and then working part-time anonymously for this DeFi DAO on Ethereum under the name Crypto Texan. And then
you didn't want it to be associated in real life with crypto, right?
That was kind of the thing. I wasn't necessarily sure about what type of stigma. Also, I didn't want people at the bank knowing that I had this side gig that I was doing. And there's just a big lack of understanding, especially at that time, of like crypto being used just for like drug money or malicious activities. And, just wasn't worth the risk for me at the time. But then eventually it got to the point where I said, I think I need to do this full time and quit banking. And so through some of the BD work that I was doing at the Index Coop, I met a lot of people at Polygon on their DeFi team and reached out to them. And then I started working for Polygon full time. And that was about 4 years ago, I think. So
2021.
Maybe 20, maybe it was 3.5 years ago, 3 years ago. I'd have to go back and look. But yeah, I worked at Polygon for about 3 years. And then this idea of a DeFi first blockchain was kind of being floated around within DeFi people at Polygon and within the DeFi ecosystem at Polygon. And, you know, DeFi is my absolute passion. And it's why I'm in this space. And it's why I wake up every morning to work in this space. And so now, you know, Katana is a DeFi first blockchain that's been incubated by Polygon and GSR. And that's what I do full time now, is work at Katana.
When did you start working on Katana?
I mean, it's a really interesting question because it's been like in ideation mode, like for over 1.5 years. I mean, the mainnet for Katana went live in July. And I think it was July 1st is when it went live on mainnet. But we had been working on this idea of what a DeFi first blockchain could really look like. And we really just took a step back of, you know, all these heavy DeFi users that work at Polygon and these DeFi builders in the ecosystem. And we just said, you know, what do we really want in a DeFi first chain? Because you were starting to see these other chains start to pop up, like Blast and Barachain, that were DeFi first. And we just said, you know, what do we want? You know, and
what's our differentiator?
It really just came down to, you know, we want two main things in a DeFi chain. Is we want high sustainable yield, which makes sense. And then you want deep liquidity so that you can have conviction on your transactions or the pricing of your transactions going through at a reasonable slippage tolerance, right? And so we just said, okay, let's reverse architect a blockchain to just maximize for those two things: high sustainable yield and deep liquidity. And there's a few different mechanisms we do to achieve that. But I don't want to feel like I'm rambling a little bit, and I don't want to do that. So I'll leave it to you. We can talk about that more if we want to.
Yeah. Tell me, how would you describe Katana in one line to someone that's new to the DeFi space and crypto as a whole?
Yeah, very simply and succinctly put, Katana is a blockchain that shares chain revenue with its users through various mechanisms, right? So shortly, that's what it would say. Katana is a chain that shares revenue with its DeFi users. To elaborate on that even more, there's a few ways in which Katana generates revenue. Blockchains do generate revenue. Most of them only by a thing called sequencer fees, which is the transactions that you know, the price you pay to submit transactions on the blockchain. But Katana has 4 primary revenue drivers. The first one is Vault Bridge, where assets that are bridged to Katana actually are earning yield on Ethereum. That yield is periodically harvested by the Katana Foundation and then is used to either boost yield for liquidity providers and DeFi protocols. So if you're supplying assets on Morpho or supplying assets on Sushi, or even if you're borrowing on Morpho, the Katana Foundation redirects that revenue from Vault Bridge to boost the yield that you would get on that. And in some cases, on the Morpho side, you're getting paid to borrow. Okay, so that's one revenue driver, is Vault Bridge. Another revenue driver is AUSD, which is a stablecoin from Agora that is backed by off-chain US Treasuries, which is a same setup as Circle and USDC and Tether and USDT. The only difference here is that with Circle and Tether, the interest generated by those off-chain US Treasuries go to Circle and Tether. With AUSD, the yield that's generated from those off-chain US Treasuries goes to the Katana Foundation, which then goes to boost yield in DeFi pools for DeFi users on Katana. Okay.
So basically, you are doing a flywheel that is
Exactly.
focused on the user experience, and all the revenue is coming back as yield.
Absolutely. Yeah. It's a great flywheel. And then there's also we've got this concept called chain-owned liquidity, which is a bucket of liquidity that the Katana Foundation manages on the chain, and that's permanent sticky liquidity that's not leaving, but that also generates yield, which either compounds into more chain-owned liquidity or goes to boost the yield on DeFi pools. So I think you're picking up on a trend here. And then we've got sequencer fees as well. Every layer 2 has sequencer fees. And we've got to pay for costs to settle down to Ethereum and some other operational costs of managing and running the sequencer, but the net fees go to chain-owned liquidity and to boost yield. So we've got those 4 primary revenue drivers, and the idea is that every action on chain should go into this feedback loop, right? So if you're bridging assets to Katana, that's earning yield that benefits the DeFi ecosystem through Vault Bridge. If you're submitting transactions on Katana, those sequencer fees go to chain-owned liquidity and yield for users. If you're using AUSD on Katana, that yield is going into the flywheel. And what was it? Did I miss one? I think I said all 4. But that's the flywheel, right? Every action, everything that you're doing just goes back to the users of the ecosystem. And, right, so and higher yields, if we're boosting these higher yields attracts more users to bridge.
But how does that sustain itself in the long term?
How do you, that's a good question. And that's, I think I was getting to that actually, right? So, right, we're generating revenue and giving it back to the users for these DeFi pools. And so the revenue that's generated, right, it boosts those yields, which attracts more people to deposit and submit transactions on Katana, which increases the yields more, which encourages more people to deposit, which gets the yields more. And it's just like this flywheel effect. And it's diversified too in the revenue streams, in the sense that on Vault Bridge, that's yield that's being generated from Ethereum L1. Chain-owned liquidity is revenue, generates revenue that's being generated on the Katana chain. Transactions is revenue that's being generated by activity on the chain. And then the AUSD yield is off-chain completely in US treasuries. And so we've got this diversification as well. And I think, you could argue that this diversification of revenue streams provides for some bear market resistance and bear market resilience of the chain, especially when you're taking into account the AUSD yield that's being generated and the chain-owned liquidity yield that's being generated, right? Because chain-owned liquidity, that's not going anywhere. If we're in a big bear market and people pull money out of the crypto ecosystem in general, well, we're still earning yield on those US treasuries, which has the potential to be insulated from, broader crypto market macro situations. And then the chain-owned liquidity, that's not going anywhere. That also provides DeFi users some sort of assurances that, chain-owned liquidity is a base layer of liquidity that will always be on the chain. I think in our chain-owned liquidity portfolio right now, I can pull it up real quick. I think it's about 350,000, right? So it's small right now, but it's building up over time. 361,000 as of right now. And, as the chain continues to generate revenue and grow, so will chain-owned liquidity, and that just helps to provide deeper liquidity in the key markets that we feel like are most important to the long-term growth and sustainability of the DeFi ecosystem on Katana.
But do you feel you could have done this without actually doing your own blockchain, your own layer 2?
How do you mean?
Could Katana be only a dApp, or it has to be a blockchain to actually do all this flywheel and multi-chain integrations from multi-dApps?
Yeah, I think that is a really great question. And I think it's almost a philosophical question that we have, in the sense that we do have a web app for Katana. We are a blockchain that has an app. So I think
So
one
it's
of the
similar
trends,
to Hyperliquid.
in a sense, like Hyperliquid, right? It's a blockchain that you can deploy anything on Hyperliquid, but the main app on Hyperliquid is the perpdex, right? We kind of take it a step further in a sense that we are a sector specific blockchain, right? We are a DeFi blockchain, and in that we have this philosophy of core applications. So we believe that DeFi has matured to the point where DeFi protocols can be considered core architecture in the creation of a blockchain. And so that just means taking one protocol per DeFi primitive. So lending and borrowing, that's Morpho on Katana. Spot trading on the DEX, that's Sushi on Katana. We have a meme coin launchpad that just launched called Kinsei. Yeah. And then we've got our perp DEX that we are in negotiations with right now on becoming a core application. And the benefits of that, of having core apps, is you get to concentrate all of the rewards, right, from Vault Bridge and all those revenue streams that I mentioned into those core apps. So there's and that creates just this huge depth of liquidity that you don't really see elsewhere. And there's this issue where it's like, okay, if you have 10 different decentralized exchanges on a layer 2, well, you've got liquidity that's fragmented across all of those 10 decentralized exchanges. Like, a lot of people talk about liquidity fragmentation in regards to liquidity being on different layer 2s, but not a lot of people talk about intra-chain liquidity fragmentation. And for users, it's like there's no question on where to go to get the best price for your swap. It's Sushi. That's where all the depth is. That's where all the liquidity rewards are going. So it eliminates guessing in the sense that users don't have to guess for the best prices or where the rewards are going to be. And it creates more depth, which is better price execution on trades. And on the Morpho side, it provides for more consistent borrowing rates as well, is what we're learning. And yeah, so there's a lot of benefits there. So you can think of Katana as an app chain, the app being DeFi specifically.
Yeah, and it's a one-stop shop for our DeFi activities.
That's what we want it to be. Yeah, absolutely. And if you go to app.katana.network, we're in beta version of the app right now. Right now, you can deposit into Yearn Vaults, and there's an ecosystem page where you can see all of the other apps that have been deployed on Katana. And that's that's one of the beautiful things too, is this isn't a permissioned blockchain. Anyone can deploy any app they want to. But what we want to see is, from a builder innovation standpoint, we want that to take place on the composability layer on top of Morpho, Sushi, Kinsei, and the perpdex, right? So we have a lot of builders that are building on top of our core apps, which is
so basically
just
all
providing
apps to be interconnected, to work in symbiosis.
That's another thing too. Like the Katana, Morpho, Sushi, and Kinsei team and Agora AUSD, we all work very, very closely together, and it's really exciting. It's something I haven't quite experienced in the DeFi space yet. We're really excited to get our perpdex live as well, to kind of see what kind of efficiencies we can work out there. Like all these projects that are building on top of these core applications is just providing like new innovations, new strategies, and new efficiencies to this model as well, right? So we've got you've got concentrated liquidity managers on Sushi. We've got 4 main ones right now. That's like Charm, Phi, Steer Protocol, Gamma Strategy, and the Deep. They're all making all of those Sushi V3 positions even more efficient for users. That it's providing better trading, better returns for LPs. It's a really exciting thing to see.
Is the perpdex an old player in crypto, or is it someone new?
Can't talk too much about that at the
Yeah.
moment because we're kind of negotiating what that integration could potentially look like. All to say, it's very exciting, and when you get those perpdex LP tokens that can be used as collateral in Morpho, like that presents some like interesting looping opportunities. We've got, if you're depositing in a Yearn vault on Katana, you can use that as collateral on Morpho. I think we're seeing a lot of interest-bearing collateral being used on Morpho, and a lot of markets for that's being spun up. And we also have Spectra, which is like a similar to Pendle, like the PT, YT, LP thing.
So
that just
basically
launched.
more idle
Well,
strategies.
But right now, there's a little bit more idle strategies right now. I think once the perp decks and now that Kensei's live, I think you could see some more unique strategies starting to come into the fold right now. Also, on the PTYT side, you still have to manage those positions a little bit, so it's a little bit more active of a strategy, I would say, as compared to just.
You need to have like a lot of DeFi experience to juggle through all these protocols.
Well, I mean, yeah, and that's something that we're trying to abstract away on the Katana app side, right? So right now, if you go to app.katana.network, like I said, we're in beta. You can deposit into Yearn vaults, and then you can earn. And I kind of see those as crypto savings accounts in a sense, where you deposit your assets in there, you earn some yield. If you want to go trade a meme coin on Kensei, you could withdraw out of that vault and trade your meme coin. But the plan long term is to really target three sets of users, right? You've got your retail users who are not familiar with crypto at all. So we want the app to be accommodating to them and just say, hey, we will in the future, we will integrate sushi swaps into the app and Morpho borrow and lending into the app as well. Right now, it's just come onto the app, deposit, earn yield, which is great. We want to abstract all that away. So for the retail non-crypto native users, we want to make sure that we're accommodating them. For the more DeFi
and that
degens,
way they start to actually understand by the platform being in beta, and they have like simple actions right now.
Yeah, simple actions. We're also going to integrate questing in the app, and we can kind of see that as almost a DeFi education or ecosystem exploration type of activation that users can do there. There will be a leaderboard where if you're completing quests, you can climb the ranks, so kind of gamify that experience a little bit as well. So yeah, there's a lot of things on like the non-crypto native retail side. We also want to accommodate the DeFi degens, which is right now, that's why we have the ecosystem exploration page where you can go there and see what other apps are live and kind of go through, these more sophisticated earning strategies that are maybe a little riskier for the non-crypto native retail audience. And then institutions as well. One of the things we brought on institutional grade projects like Lombard that has interest-bearing BTC wrapper. Yeah. And also we've got AUSD, which is Van Eck is a partner in Agora's AUSD. So we've got a lot of institutional grade asset issuers also on the chain.
Yeah, that was one of the question in my head that I wanted to put you. Who is the ITL user? Is it like the normie, the experienced DeFi head, or the institutions?
Yeah, it's I would say it's all three. I'd say like the biggest opportunity for growth would be tapping into there's so many people who they might own crypto, but they're not using DeFi, right? I think that there's a wide market there that we would like to attack and bring them, not attack, but bring them in and get them familiar and get them earning yields. But right now I think we need to focus on the institution and the DeFi native users first, while slowly building out the more non-crypto native user experience within the app, which our dev team is doing an incredible job at. I'm excited for V1 of the app, which should go live sometime next month. And then, we've got V2 and V3 planned as well, which will have some very, very exciting integrations for non-crypto natives as well.
I know you guys had no pre-sale and no VCs involved. How important was that for the credibility and decentralization?
I think from a credibility standpoint, I think it is a little important. I think there has been a narrative around VC chains and what that looks like. I think, that's not to say that we won't raise money in the future, right? We need to, we need funds to continue operations.
That's the paradox, I mean, nobody wants a VC chain, but how do you discover a chain if he doesn't have money from VCs to actually grow its user base?
And this is just, this isn't the Katana team talking. This is more me talking. But I think the way in which it worked out for us, being incubated by Polygon and GSR, we were able to lean on some of their resources on like the BD marketing and engineering side while we were getting ramped up, and we're separating more and more from the Polygon team every day, which is sad because I miss working with a lot of those people. But it's also exciting because we're really getting the ball rolling on this side, on the Katana side. But we also, right now, if you look at all those 4 revenue drivers that I mentioned earlier, we're generating about $500,000 a month in revenue. The majority of that is coming from the yield generated from Vault Bridge. But, it's kind of put us in a spot where we wanted to be able to do things the way that we wanted to do it without a lot of VC influence, especially starting out. And I feel like we're very lucky in the sense that we've been able to do that, and we can show that our philosophy and the way that we wanted to build things is working, because we are generating like real revenue to the tune of $500K per month for the past 3 months, which is very exciting. And yeah, it's like, what are we doing with that revenue? Oh, we're giving it back to the users, right? Real yield. It's basically, with these revenue drivers, we have a perpetually funded real yield liquidity mining program, right? Like if you're LPing in a sushi pool, you're earning, well, cat rewards and sushi rewards, sure, but you're also earning more ETH and more USDC in those pools, because we're using ETH and USDC to boost those pools, and not just the cat token. And the idea is, like right now, we've got a big cat liquidity mining campaign, as all chains do. That's a great way to bootstrap liquidity. But over time, we've got these 4 revenue sources to where we will rely less and less on cat emissions over time, and we'll just be using those real yield liquidity mining incentives. Because I think for most people, if you could boost a DeFi pool with ETH as opposed to a chain token or a governance token, I think they would rather have the ETH, probably.
Yeah. But I also saw you guys had like a Kaito campaign at some point in time.
Mm-hmm.
How important are creators, educators, and storytellers to Katana's growth?
Yeah, we really saw the Kaito campaign as a learn to earn campaign, in a sense. So we have allocated, I think it's 10 million capped to season 1 and season 2 of our Kaito campaign. And basically, we've got a lot of stuff to talk about. The way that we've architectured our chain is very different from other chains in the sense, Vault Bridge, chain on liquidity, AUSD, core apps, all of these things that we're doing. And, leveraging the Kaito community to digest this information, learn it, create content around it, and then share it with their audience has been a huge benefit for us. I would say that campaign has been a very big success in bootstrapping our community and helping to get our word out. Because I think, if you're a non-DeFi native, I think some of these concepts can be a little intimidating.
Yeah, they are overwhelming if you don't know DeFi.
Yeah, even if you're in DeFi, it takes some time to explain how the flywheel interacts with each other and how these feedback loops present themselves. But once we explain it to people, and a light bulb goes off, They get very excited about it.
Yeah, I mean,
which is
at the
which
end,
is what we're seeing.
I mean, at the end of the day, if people really understand that I pay my liquidity here, I earn yield, and also Katana is sharing the revenue with me, the user, that's kind of the only USP you want, right? Especially in a revenue meta.
Yeah, absolutely. And I think another thing that's really exciting about this model is that, if you bridge assets to Katana and you're just keeping them in your wallet, you're not earning those benefits of the yield sharing. You have to deploy it in DeFi, which encourages users to deploy those assets in DeFi so they can earn yield on those assets, a higher yield that they would get on other chains. And that follows a metric that we really focus on a lot that's called productive TVL. And we define that as the assets on the blockchain that are actually being used in DeFi. Because you can have a chain that has $1 billion in TVL, but if only 50 million of that is being used in DeFi, like what does that mean about? I don't want to
say what chain did this recently.
I just made. I'm not trying to post. Yeah, I just made up those numbers, so I'm not trying to call anybody out.
I'm just gonna say Boyko.
Oh yeah. I mean, Bear Chain. So I would say that a lot of people on the Polygon and the Katana team know a lot of people on the Bear Chain side.
I'm a Bear Chain very bullish guy, but a lot of that liquidity is.
You're still a baddie.
Yeah, I'm not a baddie because I'm a boy, but
I know. I'm just kidding.
Yeah, but I actually did a documentary with them, so I'm very bullish.
Great! You did.
Yeah. Filmed entirely.
I need to check that out.
Yeah,
I think Smokey, Jack Melnick over there. I think they're incredible. I worked very closely with Jack Melnick at Polygon as well. I love their team. I love what they built. I think it's incredible. And there's I think part of, if you look at the architecture of Katana, you can kind of see ways in which we've adopted mechanisms that have been used by other blockchains and other DeFi protocols as well. Like the concept of chain-owned liquidity. Well, that comes from the concept of like protocol-owned liquidity. And then Vault Bridge, it's somewhat similar to Blast in a sense. But what Blast did is, they issued like rebasing, or not rebasing, but interest-bearing tokens on the chain, right? So in Blast, you bridge over to Blast. Those assets generate yield on L1 or off-chain, and the token that you get on the other side, it increases in value, right? But that discouraged people from actually using those assets in DeFi. And so that's something that we wanted to do is, if the tokens you got on Katana through Vault Bridge were already generating yield without you using them in DeFi, there's less of an incentive for people to actually use DeFi and grow the ecosystem long term, which is why we decided to take that yield and to boost pools, to encourage that DeFi activity and further grow the ecosystem.
But is Blast still around? Or did they shut down completely?
I don't think they've shut down. I think they're still around. They still have quite a bit of TVL. Did they shut down?
Oh, that's why I'm asking.
Oh, I don't think so. I think they're still around. But still, a lot of things that, and even if you look at our tokenomics structure for CAT, we believe in DeFi so deeply that the CAT token is a DeFi token that it is adopting a model that's similar to Curve, Solidly, Aerodrome, Veldrome, the VE tokenomics model. The thing with those, those 4 projects I mentioned, is those are applications on a blockchain. We're taking the VE tokenomics model chain wide, so users can take their CAT, stake it for VCAT, and then they get to vote on which DeFi pools in the Katana ecosystem get future CAT rewards, and then they earn a portion of the fees from the pools that they voted for. And then there's like the vote incentives market too, right? Like if Lombard had a pool on sushi that they wanted to incentivize, like Lombard could incentivize users to vote for their pools, and there's that market as well. So it just creates another feedback loop. And for those emissions that are being used for the voting on for those pools, I think over time a portion of the revenue generated by the chain will go to cat buybacks to fund those emissions. Yeah. There comes a time where we want to start to be a little bit stingy with the cat in our treasury, and using the revenue generated by those 4 primary revenue drivers to boost yield instead of using solely the cat token, and then also using that revenue to buy cat to fund the emissions voting with VCAT. It helps us to achieve that.
Yeah, and probably better than me that when you launch a token, even if you have like the best yield, the best product, everybody's gonna look at your token price. And if you don't sustain the token price, everybody's gonna judge you. And that's
and I think,
world you live in.
Yeah, it's just a wild world in crypto, especially when we talk about token generation events and airdrops and things like that. But what we are hoping that people will look to is, what kind of yield can you get when you're using your VCAT to vote for emissions? Like, what kind of revenue can you generate on the pools that you vote for, and what kind of revenue can you generate from the vote incentives that other protocols might be offering to those VCAT voters? So that's something that we're hoping people will pay a little bit more attention to.
Yeah, and right now, so Katana right now is it in beta? What can we expect in the next 6 to 12 months?
Yeah, so I'd say just the Katana web app is in beta right now. The Katana chain is live and blowing and going. We've got about 550 million in productive TVL, right? We don't really care about the chain TVL number. We care about the amount of assets that are actually being used in DeFi, and there were about 550 million. We're generating great revenue, 500,000 a month for the past 3 months. And what will the next 6 months look like? We've got V1 of the app coming up. We've got TGE coming up as well. We want to integrate more apps into the web app. So I talked about, sushi swaps and morpho lending. Would be great to get Spectra on the web app as well. Maybe integrate some ALMs for, a little bit more efficient liquidity provisions on sushi. And we're talking to a lot of asset issuers that want to deploy more yield-bearing stablecoins and things of that nature, which is great for looping on Morpho, and using like a yield-bearing asset as collateral is a great thing to do. Not financial advice. Do your own research. DeFi is risky. Crypto is risky. It's still a new space. There's the potential of a Katana native NFT project that could potentially go live with some DeFi utility baked in, right? We're a DeFi chain. Everything we do has to contribute to productive TVL and generating more chain revenue for the users. So 6 months is a ways off, but we've got a lot in the pipeline. We're all staying very busy.
And I'm really looking forward to see everything that's gonna happen.
Me too.
But on a more personal level, Justin, you've been around since 2017. What keeps you personally motivated to keep building through each cycle? Because right now we can see maybe it's the top of the cycle. I don't know. I don't want to discuss this, but you know how it is.
Yeah, I think, I kind of checked out in late 2018, 2019. But then, I think that there's just so many smart people in the space. I meet with different DeFi teams every day, and just consistently blown away by the founders and the builders in the space that are creating these new on-chain primitives, or rethinking how the traditional finance has worked in the past, and trying to re-innovate it on chain. And I think that's one of the biggest things, and I think that there have definitely been some times, especially in this last bear market, where I definitely had to convince myself a few times where I was like, we're on the right track. Just got to keep pushing, right? I think, there's a time where, yeah, when Tornado Cash got in trouble and there were like OFAC sanctions going on Ethereum validators in the US, I think that was probably a down time for me.
But
where
was he pardoned or only Russell Brick?
What was that? Pardoned? I'm sorry.
Was he pardoned, the death from Tornado Cash, or only Russell Brick from Silk Road?
I'm not up to date on the Tornado Cash side. Ross has been pardoned, right, and he's out, which is great. But I think there was definitely a time where we were fighting an uphill battle, especially in the DeFi space. But I have to give credit to the U.S. judicial system, where if you were able to fight the SEC and you took things to court and you were able to win because you knew you were right, that helped us quite a bit. And I think that was very encouraging to people in the space as well.
So basically XRP.
XRP is a good one. There were quite a few other ones too. Coinbase did some. I think the DeFi Education Fund through Uniswap did some. A lot of lobbying efforts by a lot of great people in the crypto space. Rebecca Reddick comes to mind, especially if you're not following Rebecca Reddick on Twitter. Give her a follow. She was the chief legal counsel for Aave and then Polygon and now Jito. She is sharp. She's great. She's one of my favorite people in crypto, hands down. But I think there's a lot of advocates in our space. There's a lot of people that believe in open source software and code and the freedom of financial markets across borders in cultures. And I think underlying everything that everybody does in the crypto space, we do have these principles of open source software, the right to transact, to me, is a human right, and I think that's some of the things that really drive me forward and get me waking up and going every single day. Plus, I just love DeFi; it's so fun.
By the way, one question just popped up into mind right now. So,
sure,
you know how metas shift like 1-2 weeks. Everything changes and now everybody's talking about privacy. Are you planning to do like some stealth DeFi pools on Katana?
I think it's something that's been on our roadmap. I think for some time. I think there's some great privacy projects out there, like Railgun, for example, is really amazing. Would love to get them on Katana. Yeah, privacy does seem to be the trend right now. DPen was a big trend for a while. NFTs was a big trend for a while.
Yeah,
Gaming was a big trend for a while. But I think, for me, I've always focused on DeFi. And I think, in my opinion, that's the most important thing. Like you get a blockchain, the first thing you need on a blockchain is you need a decentralized exchange and you need a lending market. And then after that, you can start building things on top of it. So it is the core primitive for the success of a blockchain, in my opinion. Even if you're a gaming chain, a game that's just focused on gaming, you still need to find a decentralized exchange to launch on your blockchain so users can swap assets and trade assets easily. So
even Counter-Strike has a marketplace, right? It's just not on chain.
Yeah, exactly.
But for someone starting in DeFi today, where this should begin? Do you have like some editorials or Katana or something that people can understand?
Yeah, we've considered making some DeFi 101 content, probably a little bit closer to V1, V2 of the app when we are starting to target a little bit more aggressively the non-native crypto users. Like I said, right now, it's more like the DeFi native and institutional audience who kind of understand that already. But I think Finmatics on YouTube has a great way of explaining DeFi Jacob is the account, is the man behind that account. He's amazing. I've talked with him quite a few times over the years. I think podcasts like Bankless are great for people who are starting out. And then even on the Blockworks side, if you're looking to dive in a little bit deeper, Blockworks has some great podcasts, Empire Pod, Bell Curve. I'm a big podcast guy, so I'll say that. That's where I would start. And then just experimenting, get a small amount of assets, like $100, and LP a position on Sushi Swap and see what that's like, see what the yield looks like, understand what being in range means, borrow some assets on Morpho, a small amount. On Katana, transaction fees are very, very cheap. Like I talked about those 4 revenue drivers. Sequencer fees are actually like a very, very small portion of that. So there's the ability for users to experiment on Katana too if they want to. And once we go live with questing in the app, that's a function where you can learn about different protocols and experience different things. I learned by doing and I learned by listening to podcasts. So those are my 2 things that I would point out.
Yeah, for me it was doing and losing a lot of money, but I don't want to recommend anyone to being
That's why I said start with a small amount. Start with a small amount on a chain where the gas prices are pretty, transaction fees are very cheap. Polygon and Katana are great for that.
Yeah. I mean, I'm that guy that put $500 and then I had to research why I put $500.
That, unfortunately for me, is how I operate too. New DeFi primitive, let me put money in here first and then learn about what's my money doing.
Yeah, because that's why
I don't recommend that. Don't recommend that. It's just personal preferences, not financial advice.
Yeah. Who or what influenced your mindset the most in these journeys? Mentors, books, papers, podcasters, colleagues in the industry.
I would say early on, and I'm going to forget his name, but it was, I think it was Andre Antonopoulos, I think was his name. He was a big Bitcoin advocate. I heard him on the Joe Rogan podcast, like back in 2016.
Yeah, I know that guy.
Something crazy. He's not around anymore, but he was like one of the...
He's Greek, right? Or something like that.
Yes. Andres Antonopoulos. Maybe that was it.
Antonopoulos.
Yeah, he was a big influence.
Antonopoulos.
Yeah. Okay. Yeah, he was pretty big early on. I listened to a lot of his content, dove into his papers, and he did like a Q&A on YouTube pretty frequently that helped me. I also in early days, the R cryptocurrency subreddit was a place where I would go ask a lot of questions. They still have it, a daily discussion thread, and I would ask questions and people would answer, and it was pretty amazing before the days of ChatGPT and AI. But it's still good to get that more organic feedback and answers to your questions sometimes. I think those are really
Reddit
big.
Still around for crypto, or are we just in the
there's the R cryptocurrency subreddit is around. Katana will be doing an AMA in that subreddit towards the end of October, specifically around our cat and VCAT model. So if you're around, check it out. We also have a Katana Reddit as well, our Katana. So check that out. It's not that active, but we got a small little community of people that like to share posts in there, which is kind of fun.
Yeah, because I always think that you need to diversify, especially right now, because all these chains and protocols are so city focused. But at the end of the day, it's about distribution, and we forget that there are other apps, other social platforms.
Yeah, exactly. Yeah, it's very easy to get pigeonholed into Twitter, especially if you've been in the space for a long time. We're trying to experiment a little bit with different communication channels on the marketing side, possibly LinkedIn, Reddit. We're already doing our Discord server. We really kind of have it as like a customer support server in a sense.
I hate Discord.
Yeah, it was so big back in the day. I was in like 50 discords and I was like responding in all of them, and it's just not the case anymore like it used to be.
Are you thinking about going like to doing like some normie stuff on TikTok or YouTube or Instagram?
Yeah, that's a good question. I think there are certain geographical markets that are more receptive to content on Instagram, and it just depends, right? Every geographical area has their own preferences on where they digest their information and get their information. And then, we do have this project that's live on Katana called Universal, which is really cool. They take non-EVM assets like XRP, Cardano, Sol, Sui, and they wrap them to be on EVM. So I can definitely see a future where we have, UXRP on Katana. And if we're trying to target XRP holders with the yield opportunities for UXRP, I think TikTok might be a better medium of communication for that.
I started
meet the holders where they are.
I started TikToking, so basically I put short clips of my podcast, 1 minutes, and I didn't use TikTok until now, and I started searching for crypto content. Everybody was talking about XRP 100x.
Yeah, meet the holders where they are. If the majority of the XRP holders are on TikTok or Reddit, then, if there are yield opportunities for them on Katana, you need to meet them where you are. We're not going to bring those users to Twitter necessarily.
Exactly. Justin, before you wrap this up, brother, where can we follow Katana? Where can we follow you and people to stay updated?
Great question. First thing, go to the app.katana.network. Check out the vaults. Get ready for V1 of the app. It's currently in beta. Follow us on Twitter @Katana. Join our Reddit, /Katana. You can follow me @crypto_Texan. And it's been really great chatting with you. I really appreciate the opportunity to talk about DeFi and Katana. It's been great.
I can see you're very passionate. Thanks a lot for your time.
Absolutely.